Good afternoon, everyone. I welcome you all to the earnings call of Meghmani Organics Limited for Q4FY23. Today we have with us the management represented by Mr. Ankit Patel, Chief Executive Officer, Mr. Gurjan Singh Chahal, Chief Financial Officer. Before we get started, I would like to remind you that the remarks today might include forward-looking statements and actual results may differ materially from those contemplated by forward-looking statements. Any statements we make on this call today is based on our assumptions as on date, and we have no obligation to update this statement as a result of new information or future events. I would now like to invite Mr. Ankit Patel, CEO of Meghmani Organics, to make his opening remarks. Over to you, sir.
Thank you, Vikram. Good afternoon, everyone. A warm welcome to each one of you, and thank you for joining us on our Q4 FY23 earnings conference call. I trust everyone is doing well. I believe you have got a chance to go through the financial result and investor presentation. Firstly, I would like to highlight certain development during the quarter 4. Meghmani Organics was ranked number 1 Fortune Next 500 company by Fortune India during Q4 FY23. We are grateful to all our stakeholders for their continual support in our capabilities and our vision for over 3 decades. I am happy to share that our agrochemicals vertical has bagged the prestigious Responsible Care certificate in the FY23, reflecting the company's continual improvement in the safe chemical management. It propels us to achieve excellence in environment, health and safety performance in the coming years. During FY23, we have commenced commercial production from the backward integrated multipurpose plant at Dahej of our new age high-value products such as lambda-cyhalothrin technical, flubendamide, cyflothrin, beta-cyflothrin, pyromecyphan, catering both domestic and export market. The plant is getting stabilized now. It will add meaningful contribution in the coming years. In the fourth quarter, the company has commenced the phase 1 of titanium dioxide plant with an annual capacity of 16,500 ton, and the plant is under trial run and is expected to be stabilized in the next quarter. The board has recommended the final dividend of 140% for the FY23. FY23 has been a tough year for the Indian chemical industry that has been impacted by global macroeconomic factors, geopolitical concern, inflationary pressure, volatile raw material prices that has led to contraction in demand. We expect the spillover effect of the subdued environment expected to stay for the upcoming quarter. At present, there has been decline in raw material prices and logistic costs, but it will have its positive impact in production and the operation going forward in the coming quarters. The revenue as well as margin across chemical companies remain under pressure due to pile-up of high-cost inventory, oversupply situation in the marketplace. However, we expect the situation to improve going forward. Now let us discuss the segment-wise performance. Agrochemical constitutes 76% of the company's revenue during the last year. Despite headwinds, the segment's EBITDA margin stood at nearly 19.6% for the FY23 versus 20.2% last year. The company is well positioned to benefit from China Plus One strategy of global players coupled with the enhanced capacity eyeing on new molecules in agrochemicals. Pigments constitute 26% of the overall revenue of the company's revenue. Currently, pigment industry is going through a challenging phase, resulting slow export demand and contraction in prices. As discussed before, during FY23, the pigment division performance was impacted due to liquidation of high-cost inventory. The recovery is expected from the coming quarters. Now let me take you through the financial performance of the year. During FY23, company's revenue surged by 2.5% to 2,557 crores. EBITDA stood at nearly 364 crore during the year, while the EBITDA margin was 14.2% for the FY23. It was impacted by the pigment segment, which was partially offset by the agrochemicals division. Net profit during the year stood at 250 crore. On the balance sheet front, the company's cash and cash equivalents stood at 59 crore as on 31st March 2023. The debt to equity ratio is at 0.42. Despite ongoing capex, we are happy to share that Meghmani Organics consistently maintaining the debt to equity below 0.5. The return ratio like ROCE and ROE stood at nearly 14% and 16% respectively for the year. The finance cost for the company continues to maintain prudent risk management policy. During FY23, there was a huge volatility in the currency movement, which has led to mark-to-market gain on receivable and mark-to-market loss on the foreign currency borrowings. As per the accounting standard requirements, mark-to-market gain was 76 crore on receivable and has been shown as other income, while the mark-to-market loss on foreign currency borrowing stood at 46 crore and has been accounted as a finance cost. To conclude, Meghmani Organics continues to retain and attract new clients with our diversified product portfolio and quality products. The long-term goals are robust and our competent human capital is swiftly moving towards to materialize the company's long-term goals. With this, we would be happy to address the questions of the investors and analyst fraternity. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star followed by 1 on your touchtone phone now. Anyone who wishes to ask a question at this time may press star followed by 1 on your touchtone phone now. We take a first question from the line of Rahul Veera from Abacus. Please go ahead.
Hi, Ankit bhai.
Yes, Rahul bhai. Good afternoon.
Good afternoon. Just a quick question, recently the prices of 2,4-D specifically have sharply come off. And even recently on its public platform, Atul has mentioned that it's going to be very challenging year for 2,4-D. So, other than the MPP plant that we have started recently, do you think the base can still grow in the agrochemical division for us?
Rahul bhai, not only 2,4-D, I think across the chemical sector and across the agrochemical sector, for majority of the products, prices have dropped significantly. It varies from 30% to 45-50% depending on product to product.
Right.
And it applies to 2,4-D as well. But at the same time, the positive thing has also happened. The raw material prices were significantly high. Now it has also come down very well. And the logistic cost also, because we being in the exports, more into export, logistic cost went up drastically in last 2 years. Now it has come back to the pre-COVID level. So the two things have been positive. At the same time, the realization have also come down.
Sure. So FY24 it will be difficult to grow on that base X of the new multipurpose plant. Is that a correct statement to make on a top line basis?
Yes, you can say that the volume growth will be there from the existing products, but at the same time, because of the prices have come down, there will be some pressure. But we hope that, this is a kind of a situation where it's a temporary situation. We hope that the things should start improving from the second quarter onwards.
Sure. Fair point. And Ankit, I just wanted to understand this Lambda and everything that we have recently planning to start, right? Will registrations and everything will be required, or they're directly technical, so can directly be exported? How will that work? Product approval cycle or anything if you can highlight?
Definitely, the agrochemical products, all of them are regulated products. So you need to have a registration depending on product, be it technical or formulation in different markets. So in the past also, we have been mentioning that the way we plan for the new products as well as putting up a plan for the new products, at the same time we start doing the data generation and doing the registration in different markets. So for this new products also, we have got registration in a couple of markets. So as we mentioned, the new multi-purpose plant will ramp up slowly, gradually. In the first year, we hope it should generate 50% revenue in terms of the operation basis. Second year, about 65%, and third year onward, 75% plus.
Sure. So this is utilization we are considering, right? 50.
So based on the regulatory point approval only, we will be able to sell the product.
Sure. Fair point. And if I may ask a question to Chahal sir from the balance sheet perspective. Chahal sir?
Yeah.
So there is one exceptional item that has been provided for of 18 crores on the consolidated P&L. Item number 6, notes to accounts. What exactly is that, sir? If you may highlight. Some reversal of, due to industrial activity, industrial authority, there is some reversal of...
Actually, this is pertaining to Kilburn Chemicals, where when we have taken over, at that time we assessed certain assets and liabilities based on the fair valuation we did. And there were certain liabilities which at that point of time that was not crystallized. And later on, whenever we have all paid these amounts, so with the final amount paid, so balance has been returned back as an exceptional item.
Okay, fair point. And sir, there is a gap between the consolidated CWIP and the standalone CWIP. Like standalone CWIP is at 135 crores. May I know what is that?
CWIP?
Yeah, standalone CWIP.
Yeah, that is on the ongoing capex actually, which is yet to be capitalized.
Okay, so this is for the MPP plant?
Partly MPP plant.
Partly, okay. And again in the console, 340 minus 135, so around 200 crores is yet to be capitalized for the titanium dioxide plant. Is that correct?
Yes.
Okay, got it, sir. Fair point, sir. Thank you.
Thank you. We take the next question from the line of Ayush Agarwal from Mittal Analytics. Please go ahead.
Hi, good afternoon, Ankit sir. I hope I am audible.
Yes, Ayush.
So my first question is pertaining to TiO2, where global prices have fallen a lot, and so has raw material prices. But if you can help us understand the cost structure in our TiO2, what part will be ilmenite or how much will be power, and if you can just break up the entire cost structure, that will be very helpful.
Ayush, I'm really sorry. These are all technical details. Normally, we don't share all these things. But I can only share with you the prices of the titanium dioxide, which went drastically low. It has started improving now. Now, it went as low as 160 rupees. Now, it has reached to nearly 190 plus, moving towards 200 rupees. At the same time, the raw material price, which is main raw material, is the ilmenite, which was very high. It has come to very reasonable level now. So,
if you can put a number to that.
So the ilmenite price, which was almost 44, 45 rupees, it has come to nearly 28 rupees now.
Okay. Sir, just one, what is how much ilmenite is required for 1 kg of TiO2 in our operations? If you can tell us that.
Obviously, these are technical details, so I'm sorry I won't be able to share all those details.
Understood. Anything, so I mean, given we have done a large capex here and TiO2 prices are now down, so accordingly our asset turns will be lower. So how do we plan to make that 15-18% IRR here? Do we see our EBITDA per ton going up, or are we confident of making enough EBITDA per ton to maintain the IRR on this project?
So while going ahead with the project, we were knowing that we analyzed the number of titanium dioxide over a period of last 8 to 10 years time. So we did not select the high price time, and as I mentioned, typically the delta. Sometimes when the raw material goes up, at the same time the sales price also goes up, and if the sales price come down, the raw material price also comes down. So the delta more or less which is there, we have considered based on that delta, and we are very optimistic that there will not be any problem as far as the return from this plant is concerned.
All right. One last question on TiO2, which is since we have started the trial, and if you can throw some light on how the trial run is progressing, because I mean we really have not seen the plant, and there were some issues with stabilizing, and since this is an old plant, so some comments on the trial runs and how is that progressing?
Sure. I will just explain you for in general any chemical plant. There are three phases of chemical plant. First, the process has to stabilize. It has to go through thoroughly. Second phase is to get the right quality of the product. And the third stage is to optimize the capacity and the consumption norms. This is pertaining to, in general, all the chemical products. So the first phase, we are very optimistic that by May end, we will be able to go through we'll be clearing the first phase, which is the process parameter set. And the second and third phase about the quality and the consumption norms, we hope that it should get stabilized by June end.
Okay, after which sample products will be sent to the customers. Is that correct?
No, the sample and everything is going on. In fact, the sales have also started parallelly because the continuous production is also going on. So the sampling is also happening to the different customers. The sales is also happening to the different customers. So depending on the grade, the quality, here you can sell any kind of quality of titanium dioxide. But ultimate aim is to sell the highest quality of the product. But that doesn't mean you cannot sell the lower quality product. There is a market for every product.
Understood. One question on agrochemicals, like you rightly mentioned, across all the products, including pyrethroids, 2,4-D, everything is down. In such a scenario where there's a lot of inventory piling at the customer's end, how do we plan to navigate the next year? What are the challenges we see ahead, and how do we plan to do some incremental sales if that's possible?
Definitely. So actually we were knowing that this kind of situation has to come anywhere because it is not for the first time. If I give you the example, somewhere in the year of 2008-9, during the Olympic year in China, similar situation happened where the prices went up drastically, and after a few months it dropped like anything, and the whole industry was passing through the tough time. So it is nothing new to the industry. Everyone is well aware of it. So in the good time, everyone makes good profit. In the bad time, you have to handle all these challenges. So as a Meghmani, we have the good thing is we are coming up with a lot of new products. So in the tough time when the situation is there, we are ready to offer various products to our customer. We are not fighting with the all old generic products in the market. And at the same time, we are optimizing our operations, improvising into the yield, into the manufacturing cost. And when this tough times come, only at this time only, you improve upon your operations. Otherwise, in the good time, you don't care for all the improvisation. So we consider this as a improvisation year and a cleaning year. So it's a good thing that the industry, whomsoever will be capable enough, will survive and will improve upon. If you are not capable enough, then you will always keep on crying, and so it's going to be tough for a few companies, I'm sure. But we are very optimistic for this period.
That's great to know. One final question on agrochemical, and then I'll go back in the queue. Given we will be manufacturing a lot of intermediates in our new MPP, what I want to understand is there's a lot of dumping happening from China, and there's a lot of price which has fallen in the intermediates as well. So do you think at these levels also we will be profitable, or it will make sense to manufacture them in-house and not get them from outside?
So Ayushji, we don't see one period as a deciding factor. Because we are into export, our customers always look Meghmani from the sustainable supplier point of view. So we cannot be opportunistic, where in the tough time we stop the backward integration and buy the intermediate from outside. When the time is good, you start again manufacturing. These are all chemical plants. You need to continuously run those plants, no matter what the situation is. So as I mentioned, you keep on improving your operation, and that's how you keep yourself sustainable. And certain things you need to keep on checking whether the market is there for the product. If the market is not there, then only we go out of those products. If there is a market and future, then we continue to be there as a backward integrated player.
Understood. Thanks for answering my question, Ankit, sir. I'll come back in the queue.
Thank you.
Thank you. We take the next question from the line of Bajrang Bafna from Sunidhi Securities. Please go ahead.
Yeah. Congratulations for improved set of numbers on sequential basis. So my first question pertains to purely the new molecules that we are working currently on the agrochemical side. So if you could highlight whether any
Hello.
Sorry to interrupt, Mr. Bafna. Your line is not very clear. So please come to an area where you have a proper network, and then use the handset to ask your question. Please repeat your question again.
Yeah. Is it audible now?
Bajrangji, your line is cracking somewhere. We are not able to hear you properly. Hello.
Is it audible?
Yeah, it's audible now.
Just go ahead.
Yeah. So the first question pertains to the new molecule that we are working on the agrochemical side. So as far as my understanding goes, these molecules are unique, and there is no domestic competition as such as of now. So what sort of the sales that we are forecasting from these new 7-8 molecules that we are either launched or in the process of launching, or maybe in the registration process. So if you could get some sense on that, it will be really helpful.
Sure. So Bajrangji, we expect to generate revenue close to 650 to 700 crore from this multi-purpose plant. It includes all the products, all the new products which we have come up with, which is expansion of capacity of lambda, cyflutrin, beta cyflutrin, then spiromazepine, flubendamide, ethiprol. So a lot of new products. So this all products put together, it will generate revenue of close to 700 crore.
Okay. And by when we can expect that to happen, and any incremental capex which will be required to achieve that number?
No new incremental capex will be required to achieve this number. In fact, we have generated a new campus with a good amount of infrastructure. So now with very little capex, we should be able to generate quite a good amount of incremental revenue. So that is going to be the future target in the coming years. So by doing small capex, we should be able to multiply the revenue very fast. At the same time, as you mentioned, by when we should be able to generate this, So as mentioned earlier, we hope that this plant should run at about 50% capacity in the first year, second year about 65%, and from third year onwards about 75 to 80% plus.
Okay. And these products, considering the prices that are ruling in the domestic as well as international market, are we hopeful to, maintain the kind of EBIT margins that we are maintaining now, close to 20%?
So in the tough time also, we have been able to maintain this kind of margin. So currently, industry is passing through very, very tough time, as I mentioned. But in the long run, we are very hopeful we should be able to generate this kind of EBITDA margin.
So, Ankitji, if we just try to understand the kind of inventory pileup that is there in the system right now, by when you expect this to, completely go out and hopefully we'll again see the restocking?
As per your judgment, quarter, my analysis say as an industry as a whole, by middle of next quarter, the inventory should be clear.
Okay, got it. And on the pigment side, we have improved quarter on quarter, but now again, the major raw material, which is the urea, has also come down drastically over the last couple of months. So how do you see that segment to play out maybe in FY24, considering the current pricing and the raw material prices? What sort of margins that we can expect in today's scenario?
So even the first quarter is critical. It's a tough quarter, no doubt about it. But we have learned many things in the last year as a whole. So we have been taking a lot of corrective actions, and we hope that year as a whole, FY24 should be better for the pigment business than the last year.
Okay, so we are expecting to be in, hopefully black, maybe 5-7% kind of margins is possible?
You can say that.
Okay, and just if you could throw some light on the, the future of this nano urea, or maybe we recently heard that IFCO has already launched nano DAP also. So I think we are also working on the nano urea side, where we have entered into some sort of arrangement with IFCO. So what sort of timelines that we are expecting, the first plant to come up for us, and with what sort of capex, if you could guide us, will be really helpful.
So Bajrangi, the nano urea project, we are very bullish on that. In fact, not just us, the government of India is very much bullish on the nano urea, which is going to be the disrupting technology in the fertilizer market. In the last week, our Home Minister, Mr. Amit Shah, has inaugurated nano DAP project at the IFCO campus. So as I mentioned, government is very bullish on this kind of thing, because in India, the subsidy what is being paid by government is close to 250,000 crore, which is significantly high, and government has got a very big plan to reduce the subsidy by introducing this kind of new technology, nano urea, nano DAP. India imports close to 9 million tons of urea, and government has taken the target that in next 3 years they want to make it completely zero import of the urea. Now you can understand the 9 million tons of urea will be replaced by nano urea. So we will be one of the companies along with IFCO helping the nation and growing together. So we hope to commission the plant of nano urea by the fourth quarter in the FY24. And initially we announced the capex of approximately 150 crore for this plant.
Any clarity on the pricing and what sort of revenue that it can generate, or maybe some guidance on the margins, if it is possible? I think it is premature, but if you could get some sense from the management, from the government, then it would be helpful for us.
Sure. So it is being sold in the range of 210 to 225 rupees in the market by IFCO. There is no subsidy on nano urea, so we will not be seeking any subsidy from the government. It will be very transparent. The capacity of the plant is going to be the 5 crore bottles per year. So if we multiply, then it can generate 1,000 crore revenue.
Okay, with 150 crore kind of capex, we can generate 1,000 crore kinds of revenue. So it is very high asset turn.
That's so. And asset to turnover ratio is very high. Yes.
Okay, and can it generate, what sort of margins at 210 and 225, considering that the current raw material prices which are there in the system?
It is little early, Bajrangi. Our details and technicalities discussion with the IFCO is going on. So I think once we'll commence the plant production, at that time we should be able to give you some idea.
It looks like the return ratios are going to be far higher. Even if we generate 5% margin, even then payback is very shorter. So
it will have a much better margin than 5% for sure. No doubt about it. But clarity to the investor will be given, I think, once we'll start the commercial production.
Got it. And hope and then wishing all the best for this plan. And my last question is just considering the the trail if we see of last FY23, especially last 2 quarters, which were very challenging for us. And now we are at a stage where most of the energy prices have also come down. Supply chain issues have been continuously easing, and a lot of raw material prices have also come down. I know that there is a inventory pile-up situation in the system which is expected to be cooler soon. So can we guide that the Q1 is going to be better than Q4, because we have some early trends which are available for last 1 month. So where we have the high cost inventory for us also for raw material has been benign. So can we see the trend of sequential improvement in numbers will continue into Q1 and going into Q2?
So it is too early to give you the idea about the Q1 for FY24, but it is going to be challenging for sure, no doubt about it. As I mentioned, my prediction says that the high price inventory should be cleared by somewhere in the middle of second quarter. So things should start improving from the second quarter onwards, and third and fourth quarter should be much better.
Got it. Thank you, and all the very best.
Thank you very much.
Thank you.
Thank you. In the interest of time and fairness to all participants, kindly restrict questions to 3 per participant. If you have more questions, please join the queue afresh. We take the next question from the line of Naveen Gadia from Greenworth International Private Limited. Please go ahead.
Hello.
Yes, Naveen.
Good afternoon. Am I audible?
Yes, Naveen bhai.
Yeah, Ankit bhai. So my question is for this titanium dioxide, this plant. So may I know this are we producing from the sulfate process, or is it this chloride process?
It is a sulfate process.
Sulfate process, okay. And because as per this common understanding, because we are not technical persons, what I understand that these plants are highly energy intensive, since until now the energy prices were very high and now the market is getting softer. So will it be adding to our bottom line?
It will definitely help, Naveen bhai, because last 1 year the utility cost was very, very high, and that was impacting a lot. But the way things are improving, it will help for sure. And just to give you the idea, because it's a highly energy intensive project, we are putting our own captive power plant, so that our power cost and the steam cost is going to be drastically low.
Okay, very good. And sir, this are we having any advance orders for this, or just we are booking the orders when this production is out?
No, it is a very new plant as of now.
Trial system.
Yeah, so it is a very new plant as of now. So as of now, we are not having any big contracts or big orders. So we are giving to all the customers so that our product gets approved at different customer level. That is what our priority is. Once we get approval from different customers, then once the market improves, will be entering into the contract with a lot of other companies, because India imports close to more than 200,000 tons of titanium dioxide, and the major application is into the paint segment. And all of us know that the paint segment in India is growing in double digit. That is the reason the big corporates like JSW, MRF family, Grasim, everyone is coming into the paints business. So they are all going to be our customer.
Okay, very good.
Even Pidilite, which is very strong in adhesive segment, Pidilite is also entering in the paints business in a big way.
Okay, sir. Thank you. And my last question is that, do we have any plan to go in this medical grade, this titanium dioxide also?
Initially, no. So because we are targeting the volume, so that will be catering to the paint industry first, and paint and plastic and other industry. So the medical grade titanium dioxide is something very niche. So we are not targeting that initially.
Okay. Okay. Thank you very much, sir. Thanks a lot. Have a good day. Okay.
Thank you. We take a next question from the line of Manikant Gare from Franklin Templeton, India. Please go ahead.
Yeah, good evening, team. I hope I'm audible. Thanks for taking my questions. In continuation to one of the set of questions from one of the previous participants, I wanted to check your thoughts on nano urea acceptance on ground by the farmers. Given it's been close to 2 years, it got introduced, and if you are as bullish as earlier on this, I'm asking this because traditional urea sales doesn't seem to be slowing down. In FY23 also, I've noticed that traditional urea sales has increased by 4 million ton year on year to a new record levels. So I thought I'll check with you your thoughts on what you are hearing on the farmers' acceptance on ground.
Sure. So Manikantaji, you are absolutely correct. It's not going to be that easy to market this product, because farmer is using this product, which is the conventional urea, since so many years, and changing the mentality at the farmer level is not going to be that easy. So how do you market your product to the customer? Because the price difference is close to 15%. As far as the conventional urea is concerned, it costs about 267 rupees to the farmer, whereas nano urea costs about 225 rupees. But why it is there is not big difference, but when it comes to the government level, because of the subsidy, it is costing a lot to the government. Now, what we are doing and what IFCO is also doing, there has been significant trials and demonstration going on at the field level, demonstrating to the farmer the kind of the benefit, how their cost can be minimized and the benefit can be increased. So this sorts of explanation and demonstrations are going on. So we hope that over a period of next 2 to 3 years, farmers will understand and will shift in a big way towards nano urea.
Sure. So just a follow-up to that question, it seems there are additional costs to the tune of 800 to 1,000 rupees for the spraying that is required, because nano urea is in liquid form and it has to be sprayed. So if you have to include that, then the cost will be even higher for a farmer, right? So how that issue is being tackled?
So Manikanta, over there only your specialty enters. How do you market your product? Now, as an agrochemical, what we are doing, we are already selling our agrochemicals to the dealer distributors and through them to the farmer. They are using this agrochemicals, they are spraying them by foliar application. Now, there is already a cost involved for spraying agrochemicals. Now, how we are marketing? We are going to market. We are already taking the compatibility trials of all our agrochemicals along with nano urea. So by mixing them in one single spray, farmer can save the cost of spraying nano urea. And we have already taken the trial and compatibility. It is very much compatible. So that's how we are going to market. That the cost to the farmer is not going to increase. In fact, they can spray two products together in a single spray.
Understand, sir. So, like you were saying earlier, it's more of a mental roadblock that is there with the farmers rather than the efficacy issue that they will be facing. So, no such efficacy issues are there, is what you're saying?
Definitely, there is no efficacy issue. In fact, the results are better. So, it is just a mental mind block where different things come up that my labor cost is going to be high, spray cost is going to be high. How such a small 500 ml bottle can give the same result as 45 kg bag. So definitely it's not going to be that easy to convince the farmer. So it will happen over a period of next 2 to 3 years.
Understood. Just one last question on this. Given the government's ambition and given the opportunity size, would you be also looking, or would you be open to looking at other nano fertilizer opportunities like DAP, which got just recently launched by the Home Minister, and probably nano NPKs? If such opportunities arise, would you be open to them as well?
So Manikantaji, as we have already mentioned in the past, we have formed a new company, Meghmani Crop Nutrition Limited. So it's going to be the very big vertical. Now in this vertical, we cannot have just one product, nano urea. We'll be introducing many more products in this segment. So it will be in the coming years' time, as it will be very significant business. So there will be a lot of products, not just one product.
Right, sir. Sorry, I missed out on one question actually on the efficacy side. I'm trying to come to terms with this actual mass difference of 4% nitrogen content in 500 ml bottle versus 46% nitrogen content in the urea bag. How do we correlate these two? How do I think about this actual mass difference? I mean, end of the day, if you think about this, it looks like there is, in reality, there is a difference in nitrogen available.
So there has been a lot of scientific discussion which has already taken place in the past. When the farmer uses this urea, when it is hand broadcasted, which touches the soil, and then only part of the urea, nitrogen, goes into the soil. Balance goes into the air. From the soil, again, only part of the nitrogen will be absorbed through roots by the plant. Again, majority of the nitrogen will go into the water or into the soil as a leaching. So this nano urea is directly sprayed as a foliar application on the plant, where the nitrogen is getting absorbed by the leaves. So the absorption will be much faster, results will be much faster, and only whatever amount of nitrogen is required will be absorbed by the plant. So in a way, not just you are helping the crop, but in a way you are helping the environment. Unnecessary, there is an indirect pollution when you use a lot of urea. Again, the soil gets depleted because the pH level becomes worse, soil becomes hard, and with the nano urea, all these problems are being taken care. So it's going to be fantastic. Again, the way the government is marketing, initially there was a wrong marketing campaign that it is going to replace 100% urea. Now government has already started corrective action. It will never replace 100% urea. It will replace 50% urea. While doing the plantation, you will be using the conventional urea. Once the plantation is done, after plantation, whatever urea is being used, that will not be used as a conventional urea, that will be used as a nano urea. So you can say there can be by 50% reduction of the urea, you can have a fantastic result.
Right, sir. Yeah. I think that gives clear, detailed answers to my queries. Thank you so much.
Thank you. We'll take a next question from the line of Dikshit Doshi from Whitestone Financial Advisors. Please go ahead.
Yeah, thanks for the opportunity. Most of the questions are answered. Just a couple of things. What is the current cost of the debt?
Our current cost of debt after increase, because we in MOL we are taking in foreign currency, and all our earlier term loans on the fixed rate of interest, and average is coming around 3.5%.
Okay. And one last thing, just wanted to understand that what management are doing in terms of, to my understanding over last 3 years, there has been the third incidence of the fire. So what are we doing in terms of, investments or any change in the process or anything where we can avoid such incidences in future?
Dikshitji, you are absolutely correct. There has been some concern as far as the safety is concerned. So there are two areas where the company is having the business. One is agrochemical, other is pigment. We have done tremendous amount of work to improve on safety in our agrochemicals area, and over there we have been given responsible care certificate recently. In the pigment area also, we have started working significantly, analyzing where the things are going wrong. We are hiring experts, and as a management, we are very serious to improve upon on EHS when it comes to the business. And we assure our investors that in future we'll take care all our safety related issues.
Oh, okay. That's it from my side. Thanks.
Thank you.
Thank you. Take a next question from the line of Karan Asli from Maximal Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. A couple of questions regarding the agrochemical segment. So if I just see the Q4 production is down around 10-11% year on year, despite the new MPP plant coming online. So is there any specific reason for this, a one-off, or is this in response to the market condition?
It's mainly, currently it is mainly related to the market, because currently the demand is very much sluggish, and it doesn't make sense in doing the continuous operation and building the high cost inventory. So every company currently is going through the low phase of operation and clearing the high price inventory.
Sure, I see. And in terms of FY24, what sort of utilizations do we expect? Maybe, if you do profitability for the full year, maybe in H1, what sort of utilizations do we expect in agrochemicals as well as in the pigment division? If you can just help with that.
So we are being very optimistic, though the market in current situation is very difficult. We hope that from second quarter onwards things should start improving, and we should have a better numbers in the second half. But year as a whole, there will be some challenge as far as the utilization is concerned, but still we feel that we should be able to utilize at more than 70%.
And then this is across both segments?
Yes, across both the segments.
Sure, that was helpful. Thanks a lot and good luck.
Thank you.
Thank you. We take the next question from the line of Pradeep Agarwal, an investor. Please go ahead.
Good afternoon, sir.
Yes, Pradeep, good afternoon.
Yes, my query was regarding the fire incident. I think that has been answered. And another query is regarding the MPP plant. So what is the utilization currently, and what will be the utilization in the first quarter? Given that we have got this MNC order, which I think will be from the MPP plant.
So Pradeep, our analysis say that as per our planning, Rather than looking at the quarter, we have analyzed based on the year. That year as a whole, utilization should be at about 50%.
Okay. Yep. Thanks, OPG.
Thank you.
Thank you. Anyone who wishes to ask a question may press star one on their touchtone phone now. We take a next question from the line of Harsh Beria, an investor. Please go ahead.
Hi. Thanks for this opportunity. I have a question regarding the $100 million NMC contract that we backed. When will you be commencing production for this?
It has already commenced. In fact, the business has already started.
And is it equally distributed in the 5 years?
Yes, it is kind of equally distributed. There can be, because it's an agriculture-related model, so there can be plus or minus 10%, but you can say it is equally distributed.
And we have all the required registrations to operate at full utilization for this contract?
Definitely. Then after only we have signed the agreement.
Perfect. Thanks for that. My next question was about TiO2. In this call, there was a lot of discussion on TiO2. I think when we had initially planned our capex, we were guiding for margins around 23-24%. I think in the last call, it was maintained at 15 to 18%. Given the current realizations of TiO2 and raw material costs, what is the current margins or the spread that we will be making?
So our analysis says, in the good time, we have given the idea that in the good time, the margins are more than 20%, but on an average, it is in the range of about 15 to 18%.
Okay. And so just as a thought process, even during a bad time, our AgChem numbers are not at all bad in terms of margins. They're still able to do 16 to 18% margins in bad years. Whereas if we see that in our pigment division, that's not the case. What's management's thought process of separating these two businesses? Because the financial characteristics of both are very different.
So Harji, definitely we knew this situations before 2-3 years only, and that is why we have taken a conscious call that we will not be doing high capex in the conventional pigment business. But as far as the growth of the pigment segment is concerned, we have selected titanium dioxide, which is a high capex, high technology oriented business where small unorganized player cannot enter. Because in the conventional pigment green and blue business, we have a high competition from the small unorganized players, which creates a problem in terms of margin, and there has been some oversupply also, as well as the demand, because the major application is into the ink and other segment, where the printing ink segment is going down. So we have selected titanium dioxide, where the major application is into the paint segment, and the paint segment in India is growing in double digit. So over there, the demand is increasing. At the same time, there is an entry barrier because of the high capex and technology. So that's how we have taken the strategy.
But over time, will we see a demerger between our AgChem and our pigment business once the pigment business becomes sustaining after TiO2 capex and ramp up?
Yes, definitely over a period of next 2 to 3 years, when we see both the business are significantly big and it makes sense to unlock the value for the investors, we will definitely demerge it.
And my last question is on our NPP plant. So you mentioned 650 to 700 crores. So this is sales and not production figures for the company, right?
That's correct, for the multi-purpose plant of Agro division.
Okay. And if I may just squeeze in a last one, you talked in length about the EHS things that we are doing in the company. Can you talk a bit more about what we are doing in our company to reduce such fire incidents in the future?
See, Harji, when it comes to the chemical plant, the major risk hazard is at the process level in the operation. So majority of our critical operations we have converted into automation. where the human error can be avoided and can be taken care by the system itself. Now, the last two fire, I'm not excusing, but it has happened in the warehouse. Again, we have got all sorts of system at the warehouse, but still there has been some fire incident. And for that, we have taken a lot of measures when it comes to inventory, when it comes to the safety, electrification and everything. So we give assurance to all our investors that the management is having a very serious concern as far as the safety is concerned, and we are going to take all the actions to improve upon.
Perfect. Thanks for answering my questions and good luck with the business going forward.
Thank you very much.
Thank you. We take the next question from the line of P. Srihari from PCS Securities. Please go ahead.
Yeah, thank you for the opportunity. Am I audible?
Yes, sir. Please use the handset.
Yes.
Thank you.
Yeah. Firstly, on the titanium dioxide side, there are some reports indicating that barium sulfate can be a substitute. So that is question one. And question two is the share of formulations in your agrochemicals. How is that side and what is the contribution currently? Thank you.
So, sir, as far as the titanium dioxide replacement with the barium sulfate is concerned, there is, depending on the grades, there can be a different application. But the titanium dioxide has been widely used globally as one of the paint additives, and we don't see that getting replaced by some other product in a couple of years very soon. Regarding your other question, in terms of the percentage of the revenue from the formulation business, so currently it is about 25 to 30%.
And how is it fared in terms of growth?
Definitely, we are targeting good growth in the formulation, but at the same time, our technical business is also growing. So both the segments are growing parallelly. So we hope that the percentage for the formulation will remain in this range for sure. It will never go down.
Yeah. So hypothetically, I mean, barium sulfate can substitute how much part of the segment, if at all? Worst case scenario.
I'm sorry, can you repeat your question?
Barium sulfate for titanium dioxide, I mean, how much substitution is possible in the worst case scenario?
Even I need to check that, sir. I have not done an analysis for that.
Okay. Thank you.
Thank you. We take the next question from the line of Dipesh Sancheti from Manya Finance. Please go ahead.
Yeah, am I audible?
Yes, Dipesh ji.
Yeah. Just wanted to understand, in the extraordinary in this quarter, how much has been the rejection from the insurance company? Or is there any rejection from the insurance company of our previous incidents of fire?
There is no exceptional item. This is only in the previous year, there is a claim which was the balance amount which we have received.
Okay, so we have received all the claims which are up till now. There has been no rejection from any of the...
All the previous claims has been settled.
All the previous claims. And this quarter, the incident which happened, and how have we accounted it for?
So this happened on 16th April. So for that assessment is going on. So no adjustment has been done in the financials.
Okay, so right now we don't know what is the extent of loss.
Hello, can you repeat your question?
Do we know the extent of loss?
Extent of loss, it is under assessment, but it is between 7 to 8 crore.
Okay, between 7 to 8.
Estimate.
Okay, that is okay. Yeah, most of my other questions are answered. Thank you so much.
Thank you.
All the best.
Thank you.
Thank you. We take a last question from the line of Pradeep Agarwal, an investor. Please go ahead.
Thank you, sir, for giving the opportunity again. I just want to ask that how much is the risk in terms of percentage in the TiO2 plant, which we see now? Is it 100% success chance, or do we see any risk as of now?
Pradeep ji, we are technocrat people, we don't consider any kind of failure. So no matter what kind of challenges are going to be there, we will make it 100% successful.
Okay. And sir, another query is that means right now the shareholding of the promoters are little below 50%. So is there any plan to get it over 50%?
There is no such big plan, but promoters on individual basis, they keep on purchasing some amount of shares. So there is no such plan.
Okay. Thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, we have reached the end of the question and answer session. Now I'd like to hand the conference back over to Mr. Ankit Patel from Meghmani Organics Limited for closing comments. Over to you, sir.
On the behalf of the management, once again, thank you everyone for joining us today. We appreciate your support. And thank you to the moderator for this call as well. Thank you everyone. Bye-bye.
Thank you very much, sir. Ladies and gentlemen, on behalf of Meghmani Organics Limited, that concludes this conference. Thank you for joining with us. You may now disconnect your line.